Hello, oil traders. Lately, everyone is talking about oil, crude oil, US oil, Brent oil, all of this. So, today I'm going to analyze the oil chart for you as you see it in front of you right now. So, oil has been accumulating for a very long time, starting in the year when we started 2026. If you look at here, since January 29th of January 2026, we've been ranging in an accumulation zone. We've been accumulating oil and oil and oil. Oil chart has been accumulating for like, if you measure it from here to there, that's like almost a month. So a month and a day, 12 hours accumulation zone. So after accumulation like this, you get expansion move. And the catalyst was the Iran war when we broke out at that level. Once we broke outside of our accumulation area here, we broke out with the open like that. When the breakout happened, it confirmed this accumulation zone is valid area that will result in an expansion move. And then once we broke out, we followed it by a sloping upwards accumulation. So this one is accumulation too. Like this is not really a trend because it's consolidating but upwards. So this is upward consolidation. And when we broke out of it, then bam, we never came back for it. Like maybe later we came back for it, but like it's a very big move, you get what I mean. So after this accumulation, followed by a good breakout, sloping upward consolidation, and then bam, another breakout. Now, at this moment here, where I'm looking at the chart, oil broke out and it tested this area. We have this the weekly and daily and 4 hour liquidity area because this is the highest point where the price reached and it couldn't even close here. It dumped lower with a very bad candle. Like this candle is a momentum killer. The candle that you see in front of you, this one is a momentum killer. So this candle could tell you that was a temporarily blew off top oil price action. So we marked a blew off top price action here, and then it continued lower and lower and lower and lower until we got some sign of recovery. Isn't it coincidence that once we reached the sloping upwards consolidation area, the price found support in that area and then built to go higher again? Yeah, it's not a coincidence. I don't want to talk about the war, the Iran war, the Strait of Hormuz, and all of that. I'm not really interested about that. I'm interested about technical analysis. Yes, sometimes the war is a catalyst for the price to move, but everything you need to know is here in the chart. So if you're an oil trader, you'd suspect there could be something going on after seeing this accumulation. Like you cannot just sit here and watch this beautiful accumulation and then say like, oh well, nah, it's just a coincidence, nothing. And when the war break out, it was just a catalyst for this accumulation to expand. Because as I said earlier, the market is not moving like V shapes. It's not like this. It's like you accumulate, and once you break out of the accumulation, you have a very good valid uptrend. So as an oil trader, even if you don't know anything about the war, even if you're not reading the news, you are marking this level, like the accumulation zone high, and once it breaks out here, you should be longing without even looking at the news. Doesn't matter what's happening in the world, it doesn't matter. You understand what I mean? So this is it. So after we got this upward move, we rejected this very badly. We had a momentum killer candle and we impulse lower, impulse lower, impulse lower. And this zone, the sloping upwards consolidation, held us from going lower back to the accumulation zone here. And then we went higher. We formed head and shoulders, inversed head and shoulders, as you see here. Like you see that inverse head and shoulder. Let me put it in a linear chart for you to get it to visualize better. So you have this inverse head and shoulder. We broke out of it here at this area. If you just do it like that, we broke out of it and then accumulated again here, followed by a fake out, and then we reclaimed it correctly, like very good reclaim. tried to push lower, but it held, it closed back inside. This green box is the support, like at this period of time. So it stayed at the support, building, faked out, and then continued reclaiming the support area. And once it broke out of the support area, it went into another consolidation area here. And once it broke out from that here at this level, it went back to test the imbalance from this momentum killer candle. Because, by the way, blue off top, it takes time. So this is a blow off top, right? That doesn't mean that oil will never go back here. No, in fact, usually the market gets back to retest the blow off top and the imbalances. So this one, like this area, like you see this red box, the imbalance, this area is very high likely to be tested again. So here, like this, it was consolidating inside of the green box. And once it broke out from here and rebuilt again here and broke out here, you should know 100% that we're going to test this area again. We're testing the imbalance before rejecting lower. So basically, yeah, this is very nice chart, and this is how I could explain it. Now getting to our time now. I was explaining the past for you. Now let's explain the present kind of and the late news about this. So people are saying that oh there is a ceasefire and all of this and the Strait of Hormuz is reopened and blah blah blah. All of that doesn't really matter. Why? Because you should know once we're back to this area, it's just a bearish retest. Like you got the momentum killer candle here. You got this momentum killer candle. Then we went back to test the imbalance here. Once we tested the imbalance, you should know there is no way we sustain this one. Why? Because it's a bearish retest. So even if somehow there was the war continuing and stuff and blah blah blah, this will not work from the first time. Like always the initial retest get dumped. So because it's the initial retest after a very long time of not testing it, it's always the initial retest that gives a very good rejection for you to trade. So we got back to test the imbalance zone and we tested it and then we got our beautiful rejection, which is expected by the way, because it was just a bearish retest. That's what it is, just a bearish retest. After we got our bearish retest, you could know. And by the way, you're if you want to trade this, if you want to know how could you trade such thing, you should be just sitting here. Once you saw this candle forming and the rejection starts to be in play, you should short if you get a close below this area. Why? Because this exact zone, this line, if we close below it, which happened here, we close below it, that's a market structure break. Okay, so this market structure break is confirming that the trend is going to shift from the upside to the downside. So you should have entered a short position here. If you're trading, like if you're into that kind of trading in imbalances and inefficiencies, you should be shorting here because that's a reversal. If you are a reversal trader, you should like, oh yeah, it broke, confirm the market structure break after the candle close. You take a short here, and usually your stop loss is either here or if you're using the wicks, it's going to be here, and then you're targeting the support zone 2.25 R trade, just like that, easy. Okay, so this is how you trade it, by the way. Anyways, getting back to my own analysis, after we made a market structure break to the downside here, it's obvious that it would go back to test this green box because this is the last recent accumulation area or a zone or a level that really matter before it went upwards. Why oil was like, if you look at this, you see the candlesticks going here, respecting that level, building inside it, and once it faked outside of it, it got back and reclaimed it and even held it here. You see this candle? So yeah, that one was a crucial one. So when we got back inside, we made an initial reaction to retest this consolidation area again. So it was all moving in a systematic way. If you think about it, it's a structural based price action. So you rejected the imbalance here. It made a market structure break. It went slower. It smashed the last accumulation area as it doesn't exist, but it respected the support area here. And it gave you a retest. So it went higher like this, and then it stopped here, and retested the support again and then tried to break out of the consolidation area, but it couldn't. Okay. And it formed a lower high. So after we formed the lower high, it's obvious. Like if you look at the line chart to make it easier for you, let me get rid of all of that so you could see the visuals correctly. So yeah, you see that we bonused after we touched the support area, we give a bonus, and this bonus here couldn't break out of the old consolidation area, and then we impulse lower again to the support. But what's very interesting that we started to reject it. You see this rejection? We keeps rejecting this area, which is not good. You want oil. If you're an oil trader and you're bullish on oil, you want oil to go higher. That means it should reclaim um, this green box in order for it to have a sustainable cooling off before going higher again or anything like this. Because what you see here, the whole structure of oil, if you look at the broader structure, that's exhausted structure. The structure is exhausted. You see the exhaustion in here. Like the structure needs to cool off. It needs a reset of positioning. It needs a reset because it's so crowded. Everyone is trading oil right now. Even the people, the retail traders, and the people that are not supposed to trade oil are now trading oil. So it's very crowded trade right now. So, anyways, we formed a lower high and then we lost. Well, I'm not gonna say it's confirmed lost, but the more we're below this box, the more it's very, very dangerous for oil. So if we keep rejecting this green box, that means we're gonna go lower again to test the sloping upwards consolidation here at this area. So let me get it for you as visuals. So this area here should be your next support. This is the sloping upwards consolidation. So if we keep rejecting the green box, which is the support, currently support zone, as you see here with the text I have on the screen, that means we're gonna go to the previous sloping upwards consolidation. So the conclusion, the entire structure for oil and the whole structure is exhausted. It needs a reset. So, in order to have a reset, you need to have the price cooling off in an area or in a zone, accumulating or whatever, distributing or doing whatever. Just the price needs to cool off in an area for a little bit. And once it cools off, then whatever direction is meant to be, it gonna happen normally. Okay? So, if we keep rejecting this green box, at least from my perspective, that means we're gonna go lower here.